For Warren Buffett, it was an easy thing to do. He was able to go out and buy tons of policies, right? That's easy to do. But if you're just average Joe investor like yourself or like myself, we don't have billions of dollars or hundreds of millions of dollars to go out there and just buy tons of policies. So what was invented about 20 years ago is a thing called fractional life settlements. What that means now is rather than you having to take millions of dollars to buy policies, you can take small portions of your money, be it $50,000, $25,000, $100,000, and now you can buy bits and pieces of multiple policies. Coming up, we're going to talk about the Wizard of Wall Street, Warren Buffett, one of the smartest investors in the world and one of the richest men around the world. Yes, he's made a ton of money in stocks, but that isn't the full story. Coming up, we're going to show you how he makes tons of money outside the market and how you can follow his lead. Hello, everyone, and welcome to Truly Diversified. I'm Ben Mohr. I'm a financial expert who deals with alternative investments. And today we're going to discuss Warren Buffett, one of the smartest investors in history. He's kind of known as the sage of Wall Street, the Wizard of Wall Street. And what we're going to look at today is how he's amassed his fortune. And it's not just strictly in the stock market and why he does that, and looking into some of the plans he uses and how you can use them for your retirement plan as well. Now, let's discuss Warren Buffett. He's a name, if you're not familiar, one of the smartest investors out there for the last 60, maybe 70 years. He's been out there investing in stocks and by accumulating businesses with his company, Berkshire Hathaway, where he is the chairman. He is the master behind a lot of moves where his company has heavily invested in companies like Coca-Cola. They own companies like Geico and Duracell, and there's so many to list on and on. So where he has amassed most of his fortune is making timely moves and buying stock and more stock in different various companies to amass that fortune. Right now, if you go on Google and search his name, you can learn more about him. And his net worth at this point hovers around $150 billion, making him one of the richest people on earth. And he's done this, again, by amassing his fortune by selectively picking stocks, accumulating businesses. But that's not the entire story. That's what's painted to you in the public, is that he's kind of the Yoda of investing, right? Knows how to make the right moves, the sound moves, and make them very profitable. And on Wall Street, a lot of people pay attention to what he's doing on a daily basis because he's always been very good at doing his research and selecting winners, if you will. Now, of course, when the market goes down, which we've had like around in 2008 and these cycles that we see every 5 to 7, 10 years in the market, you have to imagine, I can't say, exactly, but you have to imagine that he probably at times has taken hits just like anyone else. I mean, that's how it works, right? You can't pick all winners all the time. I mean, there's risk in investing in whatever you do, but he's been very wise in making smart moves. Well, Warren Buffett, what he does to make sure that that doesn't happen all the time, that he has all his eggs in one basket, and that is in the stock market or by accumulating stock and taking over companies, such as we mentioned, like places like, he owns a large portion of Coca-Cola at one point, and other places like he owns, I believe, Berkshire Hathaway, the company that he runs, owns most, if not all, of Geico and other places like Dairy Queen and Duracell. And you can look it up. There's just such a long list to list. We'd be here for a half hour if I listed them all. But what he does is hedges his bets by finding alternatives to the market to place his money in. And one of them is a thing that we talk about all the time here, something that we're involved in, which is life settlements. If you're not familiar with life settlements, you, of course, can go back to some of my older episodes that we have where we discuss them, but I'll give you a quick recap here. It is where you are buying out existing life insurance policies on elderly people, usually over the age of 75, let's say, who have some health issues, and they own their permanent policy, and they want money at the end of their life for end-of-life care. So let's say if they had $1 million policy, and it's permanent, meaning it's not a term policy, it will pay off. What they do is usually sell it off to somebody for maybe 20, 30 cents on the dollar. Well, Berkshire Hathaway and Warren Buffett for decades have quietly amassed quite a fortune doing this. There are reports out there online that say that his company has bought more than $1 billion worth of life settlements, meaning that they're accumulating, buying policies from people, and then holding them. And when that person passes away, they then make money. Well, why do they do this? It's pretty simple. If most of Warren Buffett's fortune is placed in the market and has to deal with those tides, like we're seeing right now in 2025, it's been a bit of a roller coaster. If you go look at the markets this year, it's been up and down, fairly unstable. In those years, every 5 years or 10 years that we see in the market where we have some instability or a rather large drop, Warren Buffett can cover those losses because of the fact that he owns permanent life insurance policies on people. And every single year, some of those people pass away and he makes a pretty decent profit on those years, which then really hedges any type of loss that he might see in the market. It's a very wise thing to do. As a matter of fact, since he's been doing it so long, a lot of other wealthy people have followed his lead. A lot of banks have done this. There's places like Credit Suisse that have bought policies, to just name one bank that does this. There are other people who are rather wealthy behind the scenes that have been doing this and following Warren Buffett's lead for the last few decades. But what the great news is about 20 years ago, there were laws put in place, various places around this country, that allow now average investors to participate in this kind of transaction. Why is that important? Because for Warren Buffett, it was an easy thing to do because of his massed fortune, the massed fortune that he has. He was able to go out and buy tons of policies, right? That's easy to do. But if you're just average Joe investor like yourself or like myself, we don't have billions of dollars or hundreds of millions of dollars to go out there and just buy tons of policies. So what was invented about 20 years ago is a thing called fractional life settlements. What that means now is rather than you having to take millions of dollars to buy policies, you can take small portions of your money, be it $50,000, $25,000, $100,000, and now you can buy bits and pieces of multiple policies. So let's review. What Warren Buffett does is he comes in and sees 10 people, 20 people with their policies and says, I'll buy the lot. I'll buy all of them. Okay, so he's 100% owner of all those policies. Instead, what can happen now is you can have 20, 30 people come in and say, we're going to pool our money and go out and buy that one policy on one person, or go buy 5 policies together so that you now aren't having the exposure he has of having to be full owner of that policy in case there's longevity and the person lives longer. Because if the person lives longer, essentially your gains are going to go down. The longer somebody lives, obviously, it's time value money. The longer somebody lives, the less you're going to make on that policy, right? If you bought a policy from somebody tomorrow and they die in a year, you've made an incredible APR, which, by the way, I've helped people invest in this type of situation, and that has happened, where they have invested and in less than a year, they were paid. Now, that is a phenomenal situation for the investor, and it doesn't routinely happen. You might have a case, though, that could go on for 5 years or 6 years or 8 years. Now, you're still making decent returns. You're just not making some ridiculous return like a 30, 40, 50% APR, but you might be making 8%. You might be making 10% APR. You might be making 12%. Now, think about that for a second. If there was a vehicle out there that you could invest in, right, that has nothing to do with the stock market, has nothing to do with the economy, is not influenced by what's going on in the world with the situation going on with Israel and Iran, or what's going on with Palestine and Israel, or any of these other issues. We always have something possibly going on in the Middle East. We have the problem in Ukraine. We could have any time at a moment's notice something popping up in North Korea. You could have another situation like COVID. Those things all will affect the bottom line eventually if you have money in the market, because it's going to affect the economy, and you can understand that. Okay, we cover a lot of content on here, and I'm always asked this important question: where do I start? What is a good first step? Well, if you're looking for a way to diversify your retirement away from market volatility and still get competitive returns, I want you to watch this free on-demand training. In under 30 minutes, I will walk you through the exact strategy that smart and wealthy investors like Warren Buffett have used for decades, and they do it by investing in what's called life settlements. We'll break down how this works, real case studies, and how you can add this market-independent asset class to your portfolio without having to lock it up for 10 to 15 years in some low-performing annuity. You will learn how to build stable, predictable growth and, yes, get true diversification, especially in today's uncertain environment. All you have to do is go to lifeassetllc.com/webinar. Again, that is lifeassetllc.com/webinar, or you can click on the link below here and watch it now. It is completely free, and I think you'll find it will be a game changer on how you think about investing for your retirement. Okay, now let's get back to the show. Well, if you're like Warren Buffett and you buy a policy or owner of portions of policies, that situation is not affected by anything I just mentioned, because essentially you're owning a portion of a person's policy and they're either alive, right, and good for them, but we know that you're buying something where these people have health issues, and actually you get life expectancy reports to see what is the problems with these people. They're extremely detailed. And so you're now going to just bet on something that we know is a guarantee in life, which is death, right? What we can't guarantee is when they're going to pass away, but we do know that these people eventually will pass away. The sooner they pass away, the higher your APR. The longer it takes, obviously the lower APR. So what's the solution to that? Well, it's to be truly diversified, and that is by putting money into where you might own 5 or 10 policies at a time, so that you do get cases where somebody passes away early, you make a phenomenal APR, and you have a few cases that might go longer where your APR will be lower, and combined your overall rate is going to be a competitive return. And again, you're investing in something that has no correlation to the economy, politics, foreign wars, foreign events, or anything like a pandemic. And this is exactly what Warren Buffett does, and his track record is pretty good. There has been studies that have been done that have shown that ultra wealthy people who've invested in this over a time frame, they looked at it over a 10-year period. It was done by a university out of England that showed that wealthy investors who've been doing this for some time were averaging double-digit returns, right? Which is phenomenal. If you can get a double-digit return in something that is not put at market risk, and has no correlation to anything, and is getting payouts, by the way, by insurance carriers who are some of the largest, strongest companies in the world, that's a pretty good bet. And that's exactly what we do here. We take what Warren Buffett has shown us over the last decades that has been tried and true for him for hedging against the stock market, and bringing it to people like you and the public who would like an opportunity to get into this like Warren Buffett has, but you don't have the capital he does, right? The other great thing about this is that a majority of the people we work with are using their retirement dollars for this. They're not using cash. You can take cash and invest in this, and a lot of people do, but we have a lot of people who also use the retirement plans. So yes, you can invest in this with your IRA. Even better, you can invest in this with your Roth IRA, which means when you get paid out on those cases, it's completely tax-free. So I wanted to take some time today to kind of go down the path of what Warren Buffett does to amass his wealth. Yes, he's worth about $150 billion. Yes, a lot of that has been made by making smart moves in the market and also acquiring businesses through stock acquisitions, right? It's been great for him. But the part of the story that is never told to you in the public when you watch CNBC or any of these kind of shows or read anything in the Wall Street Journal about the moves that Warren Buffett is making and look how smart he is and he's the wizard of Wall Street, the point they never talk about is the fact that he has more than $1 billion reportedly put into life settlements. And there's a reason that he does it, because he knows that, yes, while his first move is the market and acquiring businesses and getting stock in those businesses, he's smart enough and realistic enough to realize that that is not the only way to amass wealth and that he needs a hedge against that situation when the market isn't doing well. So what I explain to people here all the time is, the old 1990s ads with Michael Jordan, which a lot of people will say, and I agree, I'm that era, is the greatest basketball player of all time, or as the term that they use today, the GOAT, right? The greatest of all time, is there used to be a commercial with Gatorade that said, be like Mike, right? When it comes to moves for retirement and acquiring wealth, we use the argument here of, wouldn't you want to be like Warren Buffett? And if Warren Buffett is looking at life settlements, it's something that you might want to look into. And here we offer you a chance to do that at no obligation. It's really easy. In our show notes, we have it listed there, and the website for us is lifeassetllc.com. Once again, lifeassetllc.com. And you're going to see a wealth of information there. First off is you can get an ebook from us. Just reach out to us, or it's on the website, where you get an ebook where we walk you through what we're talking here in detailed fashion. We show you payouts that have actually happened and how it happens, and how Warren Buffett and ultra wealthy have been following this for many decades. And we have a free webinar on there that you can peruse on your own time at your convenience that walks you through this too, plus the offerings we have there. So go ahead and go to our website, Life Asset LLC. You're going to see it there. And of course, if any of you at any time would like to have more information, my contact information is on there. You can go on there, and I would love to sit down and talk to you. And also, don't forget about this show, Truly Diversified. We have several episodes before this where we have talked to people in the industry who help their investors in this and have seen very profitable situations through it. And coming up in the next few episodes, we're going to talk to some people in the IRA sector who deal with IRAs and where investors are pouring in hundreds of thousands and millions of dollars into this asset. And we're also going to talk to some CPAs coming up about what they're seeing with their clients and why they're utilizing this investment tool now to also invest in. So those will be coming up in episodes. But if you are liking what you hear on this show, we want you to just please join us for some new episodes coming up. And please, on all the platforms, whether it's Spotify, iTunes, or YouTube, please click on there and follow us and give us a nice rating. It helps us get more exposure to people like you. And I thank you for your time today, and just continue listening to us here on Truly Diversified.